Welcome to the EuroTech's weekly wrap-up for the week of January 25th to 31st, 2026. I'm your host, and over the next minutes we'll recap the most important European tech stories that caught investors and enthusiasts' attention this week. From big funding rounds and unicorn milestones to major acquisitions, stock swings, and product launches, we've got you covered.
And later we will focus on the quantum technology in Europe.
Let's dive in. UK startup Synthesia hits $4 billion valuation with new funding.
Our first story, London-based AI video startup Synthesia has secured a $200 million Series E funding round, skyrocketing its valuation to $4 billion, up from $2.1 billion a year ago. Synthesia's platform uses AI-generated avatars to create corporate training videos, and it's finding real traction. In fact, the company crossed $100 million in annual recurring revenue as of April 2025, thanks to a client roster including big names like Bosch, Merck, and SAP. This profitable growth in enterprise training tech explains why investors have doubled down. Google's venture arm, GV, led the round, alongside heavy hitter backers from prior rounds.
Crucially, Synthesia isn't just raising money, it's also letting employees cash out some shares via a secondary sale on a private NASDAQ market. The company says this move rewards early team members without going public just yet. Synthesia's CEO Victor Ripperbelli noted they see a convergence of better AI agents and the need for companies to upskill staff. With over 500 employees now, this 2017-founded British unicorn is positioning itself for long-term growth, expanding beyond AI training videos into interactive AI agents that let employees query company knowledge in a human-like way. It's a significant milestone for Europe's AI scene, a homegrown startup at $4 billion valuation, proving that AI for business is a lucrative arena.
Portugal's Sword Health buys Germany's Kaia Health for $285 million.
In major European health tech news, Lisbon-founded Sword Health is acquiring Munich-based Kaia Health in a $285 million deal. Both companies specialize in digital therapeutics for musculoskeletal (MSK) disorders. Think app-based programs for back pain, physical therapy, and the like. This acquisition, announced midweek, creates one of the world's largest virtual MSK therapy providers and extends Sword's reach dramatically. Sword Health, an AI-driven digital physiotherapy platform, will gain access to Kaia's users and to Germany's digital health reimbursement system, which covers over 70 million people. In practical terms, Sword will migrate Kaia's users onto Sword's platform and immediately establish a presence in the German market.
The deal was actually heralded by France's President Emmanuel Macron as a win for European tech autonomy, since Sword's AI-powered digital therapies are used by health systems and employers to lower costs. For context, Sword Health started in Portugal in 2015 and has expanded globally, including the US, while Kaia Health was one of Germany's digital health pioneers. By combining forces, they can serve over 100 million people globally and leverage each other's tech, Sword's motion sensor-guided therapy, and Kaia's AI coaching. This marks a major consolidation in Europe's digital health sector, underlining how health tech startups are maturing into large-scale players. Plus, Bloomberg reports Sword Health may be planning a fresh $500 million funding round next, aiming to further fuel its growth. All in all, a big strategic move in health tech, as a European startup scales up to become a global leader.
French insurtech, Alan seeks funds at €5 billion value.
Next up, a headline from the French startup scene. Alan, a Paris-based digital health insurance company, is reportedly in talks to raise over €100 million at a whopping €5 billion valuation. Alan is known as an online health insurer, one of France's first independent health insurance tech startups in decades. According to sources cited by Bloomberg, if this funding comes through, It would cement Alan's status as one of Europe's most valuable fintech/insurtech firms.
For those unfamiliar, Alan offers app-based health insurance and wellness services, competing with traditional insurers by simplifying coverage and reimbursement. They've grown rapidly in France and expanded to a few other European countries. The company already achieved unicorn status a couple of years ago. Now, a €5 billion valuation would put it in the top tier of European startups. The French government granted Alan a new insurance license, the first of its kind in 30 years, which shows how it's breaking ground in a heavily regulated industry. Alan's rumored new round, if it closes, would likely fund further European expansion and product development. It also signals investor confidence in fintech-oriented healthcare models. Tech and finance watchers are paying attention because a successful raise at this valuation in the current market would underscore that Europe's fintech and health tech sectors remain vibrant. We'll keep an eye out for confirmation of this funding in the coming weeks. SAP and Nokia stocks tumble on disappointing news. Turning to the public markets, it was a turbulent week for some big European tech stocks. SAP, Europe's largest software company, and Nokia, the Finnish telecom equipment maker, both saw their share prices slide after underwhelming updates. On Thursday, SAP's stock plunged 16% in Frankfurt, its steepest one-day drop since 2020. The trigger was SAP's earnings report. While the company is pivoting to cloud services, its annual cloud revenue forecast came in weaker than expected, spooking investors. This massive sell-off in SAP helped drag the overall European tech sector down nearly 3% that day. It's a reminder that even established tech giants face high expectations. Any hint of slowing growth, even in cloud business, can send investors running.
Not far behind, Nokia's stock fell about 9.4% after the company issued cautious guidance for 2026 and announced its longtime chair, Sari Baldauf, will step down. Nokia has been struggling with margin pressures in the telecom gear market, and its conservative outlook didn't instill confidence. Combined, SAP and Nokia's woes put a damper on European markets this week. On the bright side, there were some winners. Switzerland's ABB, an engineering tech company, surged 8.5% after reporting record orders and a strong outlook, showing that not all was grim. But the overall message was clear. Investors are laser-focused on guidance and growth. As one analyst noted, the concern is whether Europe's tech firms can keep up the growth pace, especially with so much investment going into AI and digital transformation. For our listeners who invest in tech, it's a story of caution. Even reliable blue-chip tech companies aren't immune to market jitters if they miss expectations.
Munich's RobCo raises $100 million for factory robots.
Back to startup land. RobCo, a Munich-based robotics startup, has raised $100 million in Series C funding to scale its physical AI robots for factories. RobCo builds modular autonomous robots aimed at small and mid-sized manufacturers, helping automate tasks on the factory floor. This hefty round was co-led by Lingato, Exor's investment arm tied to Italy's Agnelli family, and Lightspeed Venture Partners. It also drew participation from a notable backer, a billionaire who built one of Toyota's largest dealerships, highlighting interest from manufacturing veterans.
So what does RobCo do exactly? Think robotic arms and mobile units that can be easily configured to handle things like machine tending, assembly, or material handling in factories. They combine AI software with affordable hardware to let smaller factories automate without needing a full in-house robotics team. RobCo's vision is to be a dominant robotics provider in both Europe and the US, and this new $100 million war chest will go toward expanding in the US market and advancing their tech. Founded out of the Technical University of Munich in 2020, RobCo is part of a wave of European deep tech startups turning cutting-edge research into industrial solutions. This Series C is one of Europe's larger robotics funding rounds lately, a sign that despite a generally cooler funding climate, investors will still write big checks for startups with real industrial use cases and revenue prospects. It's also encouraging news for Europe's robotics scene, which is competing with US and Asian players. With this funding, RobCo says it aims to become the dominant AI robotics company for manufacturing in the US and Europe. In the words of its CEO, we'll be watching how they deploy this capital, whether it's new product lines, global hiring, or potential acquisitions.
Spotify to open office in Turkey after government spat.
Now, an update on a European tech giant's strategic move. Spotify, the Stockholm-based music streaming company, has confirmed it will open an office in Istanbul, Turkey by June, as part of a deal with Turkish authorities. Spotify called Turkey a priority market and said deepening its local presence shows a long-term commitment to the country's music ecosystem. This comes after a bit of drama last year between Spotify and the Turkish government. The government had accused Spotify of hosting content that insulted religious and national values. Apparently, some user-made playlists mocked officials, and they threatened to ban Spotify if it didn't comply with local rules. Turkish regulators demanded that Spotify open a local office and adhere to content regulations.
After high-level meetings, it appears Spotify agreed to the office as a concession, diffusing the standoff. Now Spotify is appointing a dedicated managing director for Turkey and plans to hire staff through this year. They also emphasized efforts to promote Turkish artists, noting that Turkish-language music streams outside Turkey jumped 160% since 2020. In other words, Turkey's music is a growing global export. For international listeners, this is an interesting case of a European tech firm navigating regulatory demands in an important emerging market. Spotify had to balance its platform freedom with local laws. By reopening a Turkish office, they had one years ago that closed in 2018, Spotify ensures it can keep operating for its millions of Turkish users and artists. This story underscores how European tech companies sometimes must play politics as they expand. In the end, Turkey gets more local oversight, and Spotify gets to keep streaming, a pragmatic compromise.
Barcelona's Kilimanjaro launches DIY quantum computer kit.
Finally, let's end on a forward-looking innovation note. Ever thought of a build-your-own quantum computer kit? That's exactly what Kilimanjaro Quantum Tech, a startup from Barcelona, has unveiled. This week, Kilimanjaro launched EduKit, a modular quantum computing kit designed for universities and research labs. It's basically a hands-on quantum computer in a box, including a small dilution refrigerator for super cold temp, specialized wiring, control electronics, and Kilimanjaro's proprietary superconducting qubit processors. In plain terms, it lets students and researchers physically tinker with a real quantum processing unit on site, rather than just running simulations or accessing quantum chips over the cloud.
EduKit is meant to bridge the gap between theory and practice in quantum education. With this kit, universities can teach the next generation of quantum scientists by letting them experiment with actual quantum hardware, adjusting qubit settings, running algorithms, and seeing how quantum systems really behave, all in their own lab. Kilimanjaro's system is modular and upgradable, so institutions can start small and evolve the setup as technology advances. It comes integrated with an open-source Python software stack, Kili SDK, and a cloud platform for comparisons.
Well, Europe is pushing to cultivate more quantum expertise and self-reliance in this strategic field. Having a European startup provide an educational quantum kit could accelerate local talent development. It's also just plain cool for tech enthusiasts, a DIY quantum computer. Kilimanjaro is a smaller company, but this launch shows the kind of deep tech innovation happening in Europe's labs. As quantum computing inches forward, hands-on training tools like EduKit could pay dividends by producing more quantum engineers. So while this might not make mainstream headlines like big funding rounds do, it's an important step for the ecosystem and definitely a story that caught our attention. And talking about quantum technology, this technology has moved decisively out of the realm of abstract physics and into the strategic planning rooms of governments, corporates, and investors. And Europe is one of the regions taking this shift most seriously. And that's what we are going to focus on during the next minutes.
The core promise of quantum technology is transformative. Quantum computers capable of solving classes of problems that overwhelm even the fastest classical supercomputers. Communication systems that are secure by the laws of physics rather than by mathematical assumptions. And sensors so sensitive they can detect underground structures, molecular interactions, or time distortions with unprecedented precision. Over the past decade, Europe has quietly laid deep foundations in quantum science through its universities, national laboratories, and public research institutions. What has changed recently is urgency. With global investment accelerating and geopolitical competition intensifying, quantum technology is now framed not as a long-term research curiosity, but as critical infrastructure for economic competitiveness, security, and industrial leadership. Europe's ambition is no longer just to publish papers, but to industrialize quantum capability.
This shift is visible in the scale and coordination of investment. Public funding programs across Europe have injected billions into quantum research and commercialization, starting with the EU's quantum flagship and reinforced by national strategies in Germany, France, the UK, Finland, and others. At the same time, private capital has followed, with venture funding into quantum startups rising sharply year over year. Europe's ecosystem now includes hundreds of quantum-focused companies spanning hardware, software, cryptography, sensing, and enabling technologies. Unlike regions dominated by a handful of tech giants, Europe's quantum landscape is distributed. Startups like IQM, Pasqal, Quandela, ID Quantique, Oxford Ionics, Alice and Bob, Multiverse Computing, Riverlane, and many others operate alongside industrial incumbents such as Airbus, Siemens, Bosch, Thales, BMW, BASF, and Deutsche Telekom. This diversity reflects Europe's structural advantage, deep scientific talent combined with a dense industrial base willing to experiment with early-stage quantum applications.
From an investor and strategic perspective, Europe's quantum awakening represents a shift from optional innovation to necessity. Quantum is increasingly treated as a dual-use technology with commercial and sovereign implications, similar to semiconductors or space infrastructure. That framing changes capital allocation logic. Governments become anchor customers, corporates become early adopters rather than passive observers, and startups gain longer runways but also higher expectations for real-world impact. For investors, this means quantum in Europe is not a single bet on when will quantum computers work, but a portfolio of timelines. Near-term value in sensing and cryptography, mid-term enterprise software and hybrid computing, and long-term upside in fault-tolerant quantum machines. The strategic importance lies less in picking the ultimate technical winner and more in backing platforms that embed themselves early into Europe's industrial, security, and research infrastructure, where switching costs and policy alignment can create durable value.
At the core of the quantum revolution sits quantum computing, and Europe's approach is defined less by a single dominant architecture and more by a deliberate diversity of technological bets. Rather than converging early on one method, Europe has allowed multiple hardware paradigms to develop in parallel, supported by strong academic roots and public funding. Finland's IQM represents one of Europe's most advanced superconducting quantum computing companies, building processors that operate at near absolute zero and integrating them directly into high-performance computing centers. IQM's systems are already being deployed alongside classical supercomputers in Germany and elsewhere, reflecting a European strategy focused on hybrid quantum classical infrastructure rather than standalone quantum clouds. In France, Pasqal has emerged as a global leader in neutral atom quantum computing, using arrays of atoms manipulated by lasers to create scalable quantum processors. Pasqal's machines are already being tested by industrial players such as Airbus, BMW, and energy companies for optimization, materials science, and simulation problems. Meanwhile, photonic approaches have gained traction through companies like Quandela, which builds quantum computers based on single photons and has moved faster than most peers toward industrialization, including opening a dedicated quantum computer production facility and delivering systems to cloud providers and national supercomputing centers.
Beyond these flagship players, Europe's quantum computing ecosystem includes a wide range of specialized and often highly innovative firms. In the UK, Oxford Quantum Circuits focuses on superconducting systems delivered through cloud access, while Oxford Ionics developed a novel trapped ion approach using electronic control instead of complex laser systems, achieving record-breaking gate fidelities before being acquired by IonQ in a deal that validated European technical excellence. Germany contributes multiple approaches, from PlanQC's neutral atom systems in Munich to Elecutron's magnetically controlled ion traps in the Ruhr region, backed by partnerships with companies like Infineon. Startups such as Alice and Bob in France pursue fault-tolerant CAT qubits to address error correction at the hardware level, while Semicon in Finland works on silicon-based qubits designed to be manufactured using existing semiconductor processes. On the software side, companies like Riverlane, Multiverse Computing, Algorithmiq, and Phasecraft focus on error correction, quantum algorithms, and quantum-inspired optimization that can already deliver value on today's hardware. The result is not a fragmented ecosystem, but a layered one where hardware, software, and industrial use cases co-evolve.
Europe's quantum computing story is less about a near-term winner-takes-all outcome and more about positioning within future computing infrastructure. Quantum computing capital intensity is high, timelines are long, and technical risk remains significant, which means traditional venture logic must be adapted. Europe mitigates this risk through public procurement, research partnerships, and early industrial pilots that create demand before full fault tolerance is achieved. For investors, the most compelling opportunities often sit at the interfaces. Companies that integrate quantum processors with classical HPC, software platforms that abstract hardware complexity, and firms that solve bottlenecks like error correction, control systems, and cryogenic electronics. Strategically, Europe's insistence on sovereignty and interoperability increases the likelihood that European quantum systems become embedded in national infrastructure, research networks, and regulated industries. That embeddedness, rather than raw qubit counts, is where long-term value and defensibility are most likely to emerge.
While quantum computing promises extraordinary computational power, it also threatens the foundations of today's digital security, and Europe has treated this risk as a strategic priority rather than a distant concern. A sufficiently powerful quantum computer could break widely used public key encryption systems, exposing financial transactions, government communications, and critical infrastructure. Europe's response has been proactive and multi-layered, combining quantum key distribution, post-quantum cryptography, and sovereign communications infrastructure. At the center of this effort is Switzerland's ID Quantique, one of the world's earliest and most successful quantum technology companies. ID Quantique commercialized quantum key distribution systems years before most competitors, deploying them with banks, telecom operators, and governments across multiple continents. Its quantum random number generators have become a foundational security component in data centers, encryption hardware, and even consumer devices. Alongside ID Quantique, European research groups in Austria, Germany, France, and the UK have shaped global standards and practical implementations of quantum secure communication.
This industrial leadership is now being scaled through coordinated infrastructure projects. Europe's most ambitious initiative is the European Quantum Communication Infrastructure, designed to create a continent-wide quantum-secure network combining terrestrial fiber links with satellite-based quantum communication. This effort is supported by large public investment and coordinated through national telecom operators, space agencies, and defense stakeholders. Satellite programs led by European consortia aim to distribute quantum encryption keys across borders, enabling secure communication even over long distances. On the ground, pilot networks have already demonstrated quantum-secured links between cities, hospitals, financial institutions, and government facilities. At the same time, Europe has invested heavily in post-quantum cryptography, developing new encryption algorithms that can run on classical computers but resist quantum attacks. Startups such as PQ Shield in the UK and CryptoNext in France are translating this research into deployable software and hardware solutions, while major European banks and governments have begun early adoption programs to future-proof sensitive systems.
Quantum cryptography represents one of the earliest and most concrete commercialization pathways in the quantum sector. Unlike quantum computing, where timelines remain uncertain, quantum secure communication addresses an immediate and well-defined risk with clear buyers and regulatory drivers. Governments, financial institutions, defense organizations, and telecom operators are natural customers, often willing to commit to long-term contracts. Strategically, Europe's emphasis on sovereign, standards-driven solutions increases the likelihood that European providers become default suppliers within regulated markets. The broader impact is significant. Control over secure communication infrastructure underpins trust in digital economies, cross-border trade, and national security. For investors, this creates opportunities in hardware, software, standards compliance, and managed security services, with the added benefit that adoption is reinforced by policy rather than driven purely by market hype.
Quantum sensing is often overshadowed by quantum computing, yet it may be the fastest path to real-world impact, and Europe is particularly strong in this domain. Quantum sensors exploit the extreme sensitivity of quantum states to measure physical quantities such as gravity, magnetic fields, time, and rotation, with precision far beyond classical instruments. Europe's long-standing leadership in precision measurement, optics, and metrology has translated naturally into quantum-enhanced sensing technologies. In the UK, researchers demonstrated one of the world's first practical quantum gravity sensors capable of detecting underground tunnels and voids without excavation, a breakthrough with applications in civil engineering, archaeology, and infrastructure safety. These sensors use clouds of cold atoms in quantum superposition to detect minute variations in gravitational fields. Similar advances are underway across Europe, supported by national laboratories and university spin-outs that are now transitioning from experimental prototypes to ruggedized industrial devices.
This scientific progress has given rise to a growing set of European startups commercializing quantum sensing technologies. Switzerland's QNAMI builds quantum microscopes using diamond-based sensors that can image magnetic fields at the nanoscale, serving semiconductor R&D, materials science, and biomedical research. In the UK, QLM technology applies quantum-enhanced photonics to detect methane leaks with extreme sensitivity, addressing climate, safety, and regulatory pressures in the energy sector. Germany contributes through companies like Q.ANT, backed by industrial players, which develops quantum optical sensors for particle detection, manufacturing quality control, and future quantum LiDAR systems. Europe also leads in atomic clocks and timing systems, with national metrology institutes in Germany, France, and the UK pushing the boundaries of time measurement to levels that enable next-generation navigation, communications synchronization, and scientific discovery. Several of these technologies are already being tested by aerospace, defense, and infrastructure operators, positioning quantum sensing as a bridge between fundamental physics and applied engineering.
Quantum sensing offers a compelling risk-return profile within the broader quantum landscape. Many sensing technologies operate at or near room temperature, rely on mature laser and optics supply chains, and deliver measurable improvements over existing tools, reducing both technical and adoption risk. Commercialization timelines are shorter, customer value propositions are clearer, and revenue can emerge earlier than in large-scale quantum computing. Strategically, quantum sensors enhance Europe's industrial competitiveness by enabling better monitoring of infrastructure, improved environmental compliance, safer transportation, and more precise manufacturing. For investors, value is likely to accrue to companies that integrate quantum sensing into existing industrial workflows, offer complete systems rather than components, and align with sectors where regulation and safety standards create durable demand. In this sense, quantum sensing may quietly become one of Europe's most economically impactful quantum technologies, long before fault-tolerant quantum computers reach scale.
Europe's quantum progress cannot be understood by looking at startups in isolation. It is the product of a tightly interwoven ecosystem, linking universities, national labs, startups, corporates, and public institutions. Unlike more centralized innovation models, Europe's quantum ecosystem is distributed across countries and specializations, yet coordinated through shared funding programs and cross-border collaboration. Finland provides a strong example. Research at Aalto University and VTT led directly to the creation of IQM, which then became a national anchor company, delivering Finland's first quantum computers and participating in pan-European supercomputing initiatives. Similar patterns appear elsewhere. France's Pasqal and Quandela emerged from leading research institutions and are now closely integrated with national industry and government users. Germany's Planck-QC and Eli Qtron build on Max Planck and university research while partnering with industrial giants like Infineon. This constant circulation of talent and ideas between academia, startups, and industry is a defining feature of Europe's quantum model.
Large European corporates play a structurally important role in this ecosystem, both as early customers and as strategic partners. Aerospace firms such as Airbus collaborate with quantum hardware and software startups on materials simulation and aerodynamics. Automotive companies like BMW and Volkswagen test quantum optimization and simulation for manufacturing and logistics. Energy players such as EDF and BASF explore quantum applications in grid optimization and chemistry. Telecommunications operators, including Deutsche Telekom and Orange, are deeply involved in quantum-secure communications pilots tied to the EuroQCI initiative. Unlike in consumer tech, where startups can scale independently, quantum technologies often require industrial validation, long testing cycles, and integration into existing workflows. Europe's dense base of advanced industrial customers gives quantum startups a unique advantage: access to real use cases, domain expertise, and early revenue streams that help move technologies out of the lab and toward commercial relevance.
Strategically, this ecosystem-level coordination is one of Europe's strongest competitive assets. Public funding programs such as the Quantum Flagship, national quantum initiatives, and EU-backed infrastructure projects reduce early-stage risk and create shared platforms that individual startups could never finance alone. For investors, this lowers binary technology risk while increasing the importance of ecosystem positioning. The most attractive companies are those embedded in multiple layers of collaboration, from research consortia to industrial pilots to government procurement. Value creation in European quantum is therefore not just about technical breakthroughs, but about navigating and leveraging this network effectively. Companies that can translate scientific excellence into standardized products, integrate with corporate partners, and align with Europe's strategic priorities around sovereignty and security are best positioned to scale. In a field as capital-intensive and complex as quantum, Europe's coordinated ecosystem approach may prove to be as important as any single technological advantage. That's all for this week's wrap-up. We covered a lot of ground. We covered mainly quantum technology in Europe, but we covered a lot of ground from giant funding deals and unicorn valuations to strategic acquisitions, market tremors, and cutting-edge tech launches. European tech is truly buzzing in all corners. AI startups in London, health tech in Paris and Lisbon, industrial robotics in Munich, music streaming in Stockholm and Istanbul, and quantum computing in Barcelona. If you enjoyed this rundown, be sure to subscribe for next week's episode, where we'll break down the latest in European innovation and business.
Thanks for listening, and see you next time. Like, subscribe, and keep your curiosity high. Europe has to change and lead, and that's also up to you. Let's go.